Welcome to the Visionary Connection, where we connect with you. Today, we will be talking about this, debunking the myth about PMI, debunking the myth about private mortgage insurance. So before I even get into it, please leave comments below whether you agree, disagree, or have any other thoughts with regards to private mortgage insurance. I would love to hear it. Would love to engage in conversation via the comment chat with you. So let's start off. Number one, what is PMI? PMI stands for private mortgage insurance. Okay, simple enough. What does it do? Okay, it protects the lender in case of buyer default to an extent. Okay, so let's talk about that for a minute. If you purchase a home and unfortunately for whatever reason, you end up going into default. What does default means? It means you do not pay your mortgage, okay? It means that the home goes into foreclosure, it becomes the bank's property, and they have to sell it for a lower price, okay? Private mortgage insurance is provided to protect the lender against losses because you defaulted on your loan. Why? Because if your mortgage is this, and they have to sell it back on the market as this, that difference in between this and this is the bank's loss, okay? So they have insurance to cover themselves. So hopefully that's a very clear concept. It's private, why? Because it's not government provided. There are different private mortgage insurance companies, multiple in fact, that provide different insurance. For example, just like you have different insurance health coverage, right? You have Blue Cross Blue Shield, you have Aetna, you have Kaiser Permanente, whatever it is. Same thing, you have different insurance companies that provide different levels of private mortgage insurance to different lenders to protect them. So that's what it does. Is PMI evil? Okay, well that depends on your perspective. What do I mean by that? Private mortgage insurance can be seen as not beneficial for sure for individuals who don't want to have additional money added on top of what's called their PITI payment. PITI, principal, interest, taxes, and insurance, okay? Now the insurance part is homeowners insurance. For example, State Farm, Geico, Allstate, Travelers. That's homeowners insurance to cover your house itself or your property itself. Private mortgage insurance, again, protects the loan, but it is added on top of your normal mortgage payment. So that's why a lot of people don't like it, because they see it as fluff. They see it as an additional $50 to $250 to $350 to $400, $500 a month potentially that you could pay, depending upon the type of loan you do and your loan amount and your credit score, which we will get into. Okay, but that is additional money on top of the mortgage payment. That's why there are a lot of people who do not like private mortgage insurance. That's one perspective. The other perspective is this: if you're looking to purchase a home, you are a first-time home buyer, and the only way that you can do it, okay, is to have private mortgage insurance. But let's say your budget per month on a mortgage is $2,000. You cannot afford any more than $2,000. Well, your principal, interest, taxes, and insurance payment is $1,650. Okay, great. Now you have an extra $200 to $250 of PMI on top of that. Now you're at $1,900. Guess what? You're under budget, okay? And you have private mortgage insurance. And you've gotten a specific type of loan which helps you to reach your objective, which is what? Home ownership, right? So it's not necessarily evil because PMI comes with certain types of loans and it helps you to reach a certain objective. So hopefully that's clear. Let's keep going. Certain loans do not have PMI or have reduced PMI. VA loans do not have private mortgage insurance at all, okay? Zero, there's none included. Certain conventional loans, it's optional and it is loan specific. It depends upon Fannie Mae, it depends upon Freddie Mac, it depends upon your loan to value. How much money are you putting down? We just did a video on debunking the myths about 20% down. So if you want to see that video, see where I'm pointing? Click there and you can see that video. So it's optional, it's loan specific with conventional. FHA, it is mandatory as of now until they change the rules on all 30-year fixed. On a 20-year fixed or 15-year fixed, yes, the way that they calculate the private mortgage insurance will be a little bit lower, but it is mandatory nonetheless on all 30-year fixed FHA loans. Okay, but FHA loans are really designed truly for the first-time home buyer because there are many advantages to an FHA loan, which we will not get in today. If you want me to, I am more than happy to do a video just about FHA for you. USDA, United States Department of Agriculture, we just talked about that in a previous video. If you're purchasing a home way out in the county, more in a rural area, well, it's really loan specific, whether there's going to be reduced private mortgage insurance or no private mortgage insurance at all. How does PMI work? Okay, how does PMI work? Number one, traditionally, hopefully you can see over there, traditionally, if you're putting down less than 20%, you have a higher risk of default as far as the bank is concerned. As far as you're concerned, you're like, look, I'm gonna pay my mortgage, I pay my bills, I'm responsible. I understand that. However, if the bank is lending you $250,000, $400,000, they need to know for sure. They need to have something backing that up, something substantive to make sure that you are credit worthy for them to give you that amount of money. But if you typically put down less than 20%, in their eyes, you have a higher risk of default. So they need to cover themselves financially. Therefore, those three little dots means therefore you're going to have PMI. So number two, PMI, the actual amount, depends on conventional loans. I put CONV stands for conventional. It depends upon your credit score. It depends upon how much money you put down. It depends upon the type of property that you are purchasing. It is all very loan specific. It is not just a blanket. Okay, so you have to talk to your mortgage professional to see. You may have a loan where they calculate the factor of your private mortgage insurance to be, I don't know, $37.80 a month or $72 a month. Well, that might be very acceptable for you in the big picture, in the big scheme of things. But again, it is loan specific. FHA, as we just talked about, they have pretty much the same calculating factors on the 30-year fixed, because typically on a 30-year fixed, you're only putting down 3.5%. When you're putting down 3.5%, they have the same calculating factor, and all they do is just multiply it times your loan amount and divide it by 12, and like, oh, here's your private mortgage insurance per month. So if you want more details, please put it in the comments. Please reach out to us. I am more than happy to have that discussion with you and to explain. Number four, PMI companies provide insurance to a lender. And as I just explained a few minutes ago, just like you would have with any other insurance company, as you pay a premium, right? You have car insurance, right? You pay a premium every month, okay? Or you have health insurance. You pay a premium every month. Now, here's the thing. You have insurance in case something bad, God forbid, happens, right? You don't ever really want to use your insurance, especially your homeowners insurance. You don't want to use it. You don't necessarily want to use your health insurance for something that's bad, but it's there in case you need it, okay? Same thing with private mortgage insurance, okay? The bank never wants to use it. They don't want you to go into default. Why? They want you to continue paying on your loan so that they can make as much interest as possible, so that they can make as much money as possible. Banks do not want to foreclose on your home. Okay, that's a myth. So maybe I need to do a video on that, but banks don't want to do that. Mathematically, financially, it does not make sense for them to foreclose on your home. The longer you can stay with them in that loan, the more money they make. Okay, so they don't want to use private mortgage insurance, but they have it there in case they need it. So let's do a quick review, short video, but I wanted to debunk some myths about private mortgage insurance. So number one, what is it? What does it do? Okay, it protects the lender in case you go into default and the home unfortunately has to go into foreclosure. Is it evil? It depends upon your perspective. I don't want to use the word evil necessarily, but a lot of people really take that point of view. Okay, there are different types of loans that have PMI, reduced PMI, no PMI. It is really loan specific, client specific. Okay, how does PMI work? We just explained that, and you can go down that, and I encourage you to review that. Now, one thing I didn't talk about is, again, but we did talk about this a little bit. PMI can help a home buyer. PMI can hurt. Okay, it can help you in the explanation I gave a few minutes ago on an FHA loan, or if you have a certain budget and you need to do a certain type of loan. Even if you do have PMI, you still are at your budget per month in terms of your monthly payment, and you've done the type of loan that you need to do depending upon your situation that helps you to get into a home. On the flip side, PMI can hurt you because it can take you over your budget, okay? And it could make your monthly payment much higher than you want it to be, or it could really hurt you in terms of qualifying for a loan for something called your debt to income ratio, which we will talk about at another time. So again, if you have any specific thoughts, any specific concerns about private mortgage insurance, please contact us here at Visionary Lending. We are more than happy to explain, to discuss, and to educate you with regards to private mortgage insurance. Hopefully this was helpful to any home buyers, people looking to refinance, purchase a home for the first time or for the third time, and definitely for realtors and real estate professionals. We're here to educate. We are here to connect. Thank you so much for your time here at the Visionary Connection. See you next time.